Well, first, I would like to also echo Brittany's thank you for being here. We really appreciate you taking the time to come and get your questions answered and hopefully get some background on this critical project. I'm the interim vice president of HR. I'm going to quickly go through a few things, but then turn it over to our experts. So, Brittany, let's go to the next page. Just give you a quick idea what we're going to talk about today. We went through this a fairly extensive process to come up with the recommendation to make these changes to the retirement plan. And we want to talk through that process, make sure you understand what that was. Joseph Fidelity is with us. He has been working tirelessly for years doing this. He's one of our faculty members. He was the chair of our committee. He's going to walk you through that. We're also going to talk about what it is. What is the new investment selections? What are those new options? How does the transition work? What's that going to look like? What do you need to do? What don't you need to do? And then what are all the great new tools and capabilities that are going to be available via our new Fidelity platform and our partners at Fidelity? So we're going to have presentations from Joseph, as I mentioned. We also have Wendy from Innovest Portfolio Solutions. They were our expert guidance through this process. They do this for a living. They're retirement plan and investment experts. They coach and guide people through this. They've done this many, many times, and they really helped us. So she's going to help walk through a lot of this as well. And then we got some folks from Fidelity that are going to be your partners going forward, and they're going to kind of work through the Fidelity aspects and the capabilities and tools and give you some great next steps. So Brittany, next page. We also know that there's a lot of uncertainty with a change like this. Questions, that's what these sessions are for. We want you to ask these questions. As Brittany said, the only thing we don't want is, if you have a very specific, I have this number of dollars in this account, but if you have generic questions about your situation, please do weigh in with those. We want to answer any situational questions so that you get an understanding of what's going to happen and we can address anything. We have a very detailed plan. We had a very detailed plan to get to where we're at. We've got a lot of steps to get to completion. So rest assured, there is a very rigorous plan that's been put together for this. And for all of you, again, just reminding you that HR and Fidelity are here for any questions, concerns you've got, any step of the way. No questions too small. Get with us. In addition to these sessions, one-on-one sessions, call us, email us. We're going to have all sorts of information that in terms of how to get in touch with us, and we want you to do that. Next page. Who was involved? Again, I said there was a big committee. Joseph's going to talk that through, but it was heavily loaded with people from every aspect of our university, so there was a great representation. We had Innovest, who I had mentioned were truly our experts in guiding us through, and they really helped a lot. And then university leadership, all the way up through our board of governors, was involved to ensure that every I was dotted, every T was crossed, so that we're doing things to make the best decisions for all of our employees. Next page. And then who benefits from this? All of us. I think Joseph, myself, Terry, all the folks that you see from CSU on this, we are all equally invested in this as you are. These are our retirement plans. These are your retirement plans. So we wanted to ensure that everybody's benefiting from these great tools, the lower fees, the better investment solutions. So we think it's a great overall package of, reduced fees, better outcomes for all of you, great tools, a great team to work with at Fidelity. So hopefully you'll see that throughout the project. And as I said, feel free to ask some questions. I know we're getting a couple in there, and we'll try to address those as we hit each end of a section. So just like Joseph will go through his section, we'll take questions, and Wendy will do her section, we'll do questions. So that's kind of the flow. And with that, we are going to turn it over to Joseph.
Okay, thank you, Brett. Good morning, everyone. Thank you all for being here. We really do appreciate your attendance at these, because this, as Brett said, this is a complicated set of very important work that we really do want to talk about a lot. We really want to get a lot of this out. Brittany, please, the next slide, please. So the committee that I chaired, I'll say it that way, there's certainly a lesson to be learned here. We went into the committee in late 2019, and I made the mistake of saying I didn't like the way it was run, so I was promptly voted the chair of the committee. there's a lesson that many can learn about that. Doing so though was a real privilege, and it was a lot of work, but it was a pleasure to do. As Brett mentioned, this is our plan. This is all the participants at the university, our friends, our colleagues, our families. Many of us have a variety of different roles in the university, and we know that people nearby have a number of roles, and it's very important that we get this right. What the committee did, and again, the committee was made up of a wide variety of folks from different walks in the university. We spent a great deal of time learning about modern best practices in the higher education retirement space. Many of us have been around the block a few times, been involved in some personal investment. Then there's retirement, which is very serious work, because we certainly want to live out our retirement years whenever those come around. We want to do that with pleasance and dignity in that. So it's very important that we have those assets to let us achieve what we want to do in those times. We inherited a retirement plan that's been in place for decades and has served us reasonably well, has been managed adequately, but it was time to go through and take a serious look at the changes that have taken place in this environment. The process that we used was rigorous. At the same time that the committee was meeting, there was a university purchasing process going on, the process by which large contracts are handled in a very rigorous fashion. Anyone who's had any involvement with the university procurement process for big projects knows what I'm talking about. These are serious. They're carefully controlled. There's a considerable attention to equity, opportunity, and tranquility. Not tranquility, but it does. All those things are in there to try to make it the best possible. At the same time, our HR compatriots did a survey of the participants to find out what the participants were thinking, and we got some good, strong signals from that. Can go to the next slide, please. The recommendation that we made was based on where we started out. We had a plan that had 3 record keepers. Now it's important to understand a little bit of taxonomy, and I won't belabor this, but we'll go through quickly. There are record keepers, and these are the folks who perform the function, the difficult, sophisticated function of high-tech, modern, computer-controlled bookkeeping. They keep track of our assets, and like a bank would keep track of assets. In there, and that's an extremely important part of it, because I don't need to have any of my assets go missing. So that's an important part of it. The second function is fund management. So when we invest in something, we invest in stocks, mutual funds, and all kinds of different things. Someone manages that fund. Turns out in the earlier plan, the previous plan, the plan that we're moving out of, those 2 functions were blended together into three companies. Fidelity, Corebridge, went by a number of different names earlier, and TIA. And so those functions were blended together, and perhaps in not the most optimal fashion. So we looked and said, one of the committee made fundamental recommendation that we had duplication of those efforts and duplication of the costs. And so we recommended moving to a single record keeper, a single record keeper. Turned out that in the procurement process, there was heavy competition from different ones, and Fidelity made the best proposal. Fidelity had the right pricing, it had the right back office work. There's, cybersecurity was not a big deal back in the early days of the plan. It is a big deal now. They have good systems. They had provided good tools for the participants to access. So we chose that for the bookkeeping, the record keeping. Please don't confuse that with fund management. That's a separate function, and we're really cleaving them apart in there. The second part of this was a revision of the model that we use for paying for the plan. We, the participants, pay for the plan. The university does not pay for the plan. It comes out of our retirement funds. And so it's very important that we manage that well and keep those costs down so that we get better returns on that. We started with a per asset model, and that was one where the fee that each individual paid went as in proportion to the asset balance. Now we've learned over the course of years that the cost difference in managing a $1,000, $10,000, $100,000, or $1 million account is very small. And so this was a very advantageous to the record keepers, but not to the participants. So we've renegotiated that. There are some subtle difference details about this plan. We could go with a flat plan, in which case every participant pays the same fee, which has some social issues associated with that. And so we're still in the process of noodling out the details, the exact details of that. I can say without fear of contradiction, we're reducing the fees substantially for just about every participant in the plan. So we got that part right. And the third part of this is the actual number of funds that are available. Over the decades that the plan was in existence, the number of funds grew. Some funds have great participation, lots of folks in them. Some of them have as few as 1 or 2 investors in them. Problem with that is it's great to have the choice, it's great to have the flexibility, but we as the participants pay for that flexibility, and we want to contain that cost. Let's go to the next slide, please. As chair, I had the chore of herding these particular cats, but one of the things that was totally fundamental to everything that we did was to answer the question: what are the things? What are the components that will feed into the best possible framework for the retirement plan? Our participants need to be able to retire in comfort and ease, and we want to do the best that we can to do that. There were some things that we learned were a little bit tough to get into. When new employees, faculty, administrative staff joined and onboarded in the institution, they were faced with a lot of paperwork. These days it's electronic paperwork, but it's paperwork just the same. And there are many choices. And there was the psychological consideration that given so many choices of so many funds to invest in, there was paralysis of choice. And so some of our employees were having some trouble with that. By managing the number of investment funds, we're able to address that. We're also able to go through and do the best job in each of those funds. Next slide, please. Thank you. This was a complicated space. If you're not an investment wonk, if you don't read the back pages of the Wall Street Journal every morning with your morning coffee or tea, there's a lot of language, there's a lot of detail here that needs to be studied and learned. We did that. Our Innovest partners were instrumental in our work to educate the committee. Our HR partners did the same. We learned an awful lot about that in there, and I still don't know what a feldspar is. Next slide, please. We thought we could figure out how everything works, and we tried to do that, and we did learn an awful lot. Still not experts, but we're certainly motivated to understand this because we're affected by this also. Next slide, please. We had to face some difficult truths as we put this together. There's a lot of details. So we had a number of different kinds of folks with different in our committee that were different in their emphases. Some folks were very much interested in social concerns. Others were quants. And we put it all together and learned what we could in there. Next slide, please. But yet it comes back to the most important thing is what's important, and it's our colleagues, our friends, and families. So those changes have been thought about, and decisions have been made. As Brett said, we ran this up through the university administration, through the Board of Governors, and they accepted our recommendations, and we stand behind them as being the best for all of us. We're going to go through a lot of detail in the rest of this session and moving forward as we learn about a lot of those details. Keep the questions coming, please. Next slide, please. I'm going to hand over the microphone now to Wendy Dominguez of the Invest portfolio. Wendy, please.
Thank you, Joseph. Brett, did we want to answer any questions or pause for questions first?
I think most of these will hit as Fidelity and folks get through. They're asking questions about fees and fiduciaries. And I know there are some questions about the procurement process. If you're interested in the procurement process, you can contact procurement, and they will share what is legally allowed to be shared, because their respondents have certain things that are public, certain things that aren't. So it's up to the respondents on how much can be shared. But feel free to contact CSU procurement for any and all detail that you would like. And I think with that, go ahead, Wendy.
Okay, thanks, Brett. So my name is Wendy Dominguez. Thank you, Joseph, for the nice introduction. I'm the president and co-founder of Innovest Portfolio Solutions. And today we're going to be discussing the process that we use to select the new investment menu, as well as the process to transfer assets to the new menu, as well as the new investments. And we'll also hit on fees and some other important parts as well. As Joseph talked about, we as a firm also went through one of those university procurement processes to be hired, and as Brett said, we do work with many retirement plans and many universities in the state of Colorado. So we were thrilled to partner with CSU on this project. But the university did create this investment committee with support from us, and you can see the people that are on this committee, and that is who made the decisions on the investment funds that will be offered to participants going forward. If you look at the next page, there was a question about fiduciaries, and I think it's important to note that we are a fiduciary in serving the committee and the university, and that's really important because we have no proprietary products, we have no conflicts of interest, we don't receive any compensation from any investment product. So because of that, we can be advocates for the university and truly independent and objective in making recommendations and helping build this investment menu. Next page, please. So through our team, we provided a rigorous investment process analysis of thousands of investments that would be available to the university in which to select. We find that it's always important to look at the quantitative aspects. What's the performance? At the end of the day, it's the performance that gets us interested, but ultimately there are people that are selecting these investments. So we have to assess the culture of the organization, the people, the organization, their investment process, and their philosophy. We need to be able to try to determine, were they lucky or skillful in creating their successful track record. So all of that is information that we assessed and scrubbed, and then ultimately came together with some options for which the committee could select. Next page, please. So at the end of the day, we created a three-tiered investment menu for which you will be able to select investments from. Tier 1 is for those participants that don't want to invest much research or analysis on their own, and simply select a one investment option that grows with them as they get closer to retirement. It actually glides towards a more conservative portfolio as you approach your retirement date. Vanguard funds were selected for this tier in your plan. Tier 2 is a group of 16 or so investments that are vetted and selected through the process that I described on the prior page. Best-in-class investment option in every asset class in a more kind of Morningstar style box approach, making sure we have the best investment available for a selected asset class. And that best is an artful word. I mean, there are It's kind of in the eyes of the beauty is in the eyes of the beholder, I think, as it goes. But we think they're very high quality investment options that were brought forward for this tier 2, from which participants can select. And then should you not like either investments in tier 1 or tier 2, we have tier 3, which is a self-directed brokerage option that where you can go out and select mutual funds from a various number of different investment advisors. Next page, please. So the selection is very important, as we spent a lot of time doing that. But what's also important is continuing monitoring of those investments, because once an investment is selected, it is a responsibility to continue to make sure it's still the best in that asset category. So we will continue to monitor the investments that were selected and review it not only on performance, but on those other qualitative issues that I talked about and how important it is to evaluate all factors of the investment managers. Next page, please. So we did want to spend a little bit of time talking about fees, because in retirement plans and investments in general, it can be very opaque and not very transparent. And so we wanted to be very clear about the fees that you're paying today and how those fees are going to be changed going forward. So administrative fees are paid for the ability to have a retirement plan, the ability for you to put away money on a post-tax or pre-tax basis and have that grow tax deferred is an expense, and it is a function that Fidelity will provide going forward. You pay this fee for the ability to have this plan. What's interesting about and I think important about the new fee structures going forward, they will be unique Social Security number based instead of plan based. So right now, if you have a 403B plan and you have a DCP plan, both of those are assessing administrative fees. In this new scenario, there will be a single fee regardless of how many plans you're engaged in. What we have through the procurement process, we know what Fidelity is charging. They are charging a fixed fee per participant. What we are determining now is how that fee is going to be allocated to all participants, and that's something that we're working closely with Joseph, Brett, and Terry and Bill on the HR side to come up with what is a good way to spread that fee across the participant base, an equitable way to spread that fee.
And Wendy, let me jump in there. I just want to also, because I saw some questions about, there are some fee questions and thoughts and just to put it in context, the fee that Fidelity will be charging us for that administrative record keeping is several $1 million less than what the current record keeping fees are that you're paying with TIAA or Corebridge or with your existing Fidelity. So to give you a ballpark, we're talking several millions of dollars per year in savings on that administrative fee.
Thank you, Brett. That's great. If you look at the next page, this is an example of how you're currently paying fees today. And we've translated a fund balance based on an asset price to create these numbers. So just know that this $10 from Fidelity for a $10,000 fund balance is actually charged on the assets themselves. It isn't just a $10 flat fee. Going forward, you will be paying a flat fee, and it will not be based on the assets in your plan. And you can see how the current fees are assessed, and they are all based on assets currently. Next page, please. So what's an investment fee? So we've talked about the administrative fees. That's to run the plan and to create the website and to allocate your dollars from your payroll into your account. That's what the administrative fee is for, and for education as well. An investment fee is paid to an investment manager as on a percentage of assets to manage your portfolio. Every mutual fund charges an expense ratio. It's disclosed. However, you don't see it on a statement. It's netted out of investment performance on a daily basis. It's a big fee actually. And if you look on the next page, we try to break it down a little bit to show you kind of an example of the savings that you will receive. The first is for Corebridge. And I should note that that there is a detailed mapping analysis or strategy. That's the method for which your current investments will be moved to the new investments in the plan. But what I wanted to show here, what we wanted to show here, was that there is an opportunity in almost every single case. We are taking a current investment, moving it to a very similar investment strategy and style, and getting a very significant price reduction just because of our economies of scale through the creation of this tiered approach, and to move to more institutional investment vehicles. So for example, I think a great example on this page is this VALIC company stock index. This is an index of the largest 500 stocks in the US. And for that, currently, anyone that's invested in that through the VALIC Corebridge plan is paying 0.29% of their balance. Going forward, we're moving to the Fidelity 500 index, the exact same portfolio, but now it's 2 basis points or 0.02 basis points. So just for the exact same investment, we're able to amplify earnings that go back to your portfolio. Every dollar you don't pay in investment fees goes back to your retirement savings. So this is an example for Corebridge. If we look at the next page, for TIAA, similar, especially if you focus in on that CREF Equity Index Fund at 16 basis points, again, less than Corebridge, but still not as low as the Fidelity 500 Index Fund. So again, you can see the investment savings that will rack up through this transition from TIAA. And then also finally on the Fidelity side as well. The example on the Fidelity Index Fund, there isn't a difference there, but you can see differences in the other asset classes that we just pulled as an example. So again, in almost every single case, the current funds will be replaced with a similar fund, exact same investment strategy and style, but at a much lower fee. So if we look at the next page, I mentioned this a little bit, but mapping. So the assets for mutual funds, if you were invested in mutual funds in your current plan, the mapping will happen automatically. A like fund will be transferred to a like fund. And the mapping details can be found on this website. It's a great resource. There's an investment options guide that describes all of the new funds as well as the mapping strategy as an appendix in the back. And I highly recommend that you look at that in detail, so you know how your investments will transfer. There are current investments in the plan that are annuities. Because if we look at the next page, because annuities are individual contracts between a participant and the insurance company, they will not transfer automatically. You should contact your current record keeper for options for you regarding the transfer. Those assets can stay where they are, or if you'd like them to transfer, you can complete paperwork in most cases where they will be able to move over to mutual fund options in the new Fidelity plan. So with that, I will pause and see if there's any questions for me, Brett, or we can move on.
Yeah, let's go. There's a couple. They're around fees. It was, what will the cost be with Fidelity? Hopefully, you did see that you saw the investment fees, and hopefully, you also saw that there has been confusion that this is a move to Fidelity and all the funds will be Fidelity. Hopefully, you saw Fidelity's the record keeper. The funds are going to be the best in breed, and majority, as you saw there on that example, were not Fidelity funds. So that was that fee. And then there's a similar question. If you're talking about the record keeping and stuff, we don't know the fee. How can we decide? We will be finalizing the record keeping fee probably next week. So you'll see that as of next week. And just so you can all know the ballpark, as I mentioned, there's a couple million plus in savings for record keeping fees. Pretty much for the majority of people, you're going to see about, a 2/3 to 3/4 reduction in your record keeping fee. That's kind of the ballpark range. Nearly everybody is going to see a very sizable decrease, and we'll get that out very specifically next week. But that's kind of the ballpark you should be kind of looking at, is about 2/3 to 75% reduction in that record keeping fee per person. So, and then do Fidelity act as fiduciaries? I know you addressed your firm, Wendy, can you answer that, or does Fidelity want to jump in and answer that one while we're on that?
Yeah, I think it'd be great for Fidelity to answer that, and that's a nice transition too.
Yeah, let's bring them in, and you can answer that, and then move to your section.
All right, thank you. So my name is Stephen Maloney. I obviously work for Fidelity Investments. I've been with Fidelity for 10 years and love the company, love working for Fidelity. And I'm a workplace financial consultant. So what that means for you as the individual or participant is I sit down with you and get to know your individual situation and make sure you're on track for retirement, saving enough, invested properly. When it comes to fiduciary, there are a lot of questions behind it. I think one of them is, am I compensated for meeting with you? And no, we are not, don't receive any type of commissions or fees associated with our conversation. And you can meet with myself or anyone on the team. When we talk about fiduciary, we do have a professionally managed account where we would actually look at your account on a regular basis and act as fiduciaries investing it. But with the fund lined up, like Wendy was talking about, they look and work with CSU to come up with the funds and be the fiduciaries on those overall individual investments. Today,
I'm Maloney. In addition to that, just for peace of mind here, there's a thing out there called suitability. What's most suitable for the customers and folks seeking advice out there from these meetings that we have constantly. And there's also a thing called best interest, which is a regulation that's been put out there a lot lately. And Fidelity, we are required by policy and regulation internally to act in your best interest as a customer, as a client, not what is suitable. Because in many cases, if you're talking to a financial advisor out there, which is the majority of them, if you want to be clear about it, they'll offer one, two, three, or different solutions to your situation that could be suitable, but not always are they suggesting the ones that are in your clearly your best interest. And at Fidelity, we subscribe to that school of thought automatically.
Thank you, Sam. And we're going to so today we're going to discuss what we're doing to help you through this transition. So we'll talk a little bit about Fidelity, the team that will be helping you, the transition itself to Fidelity, and how we're going to be here to help, and then open it up to questions. Again, Sam and I have been doing this. I think both of us have been on the CSU plan for 10 years. Sam has been one of the primary points, and I've helped him out through the years. Prior to joining Fidelity, I had 15 years at TIAA. So I know, retirement income planning in both companies really well. So we're here to help you with this transition. We're not, just doing these presentations today. We'll be here on campus. I don't know if you can tell, we usually have our Fidelity shirts on. So you'll be able to stop us in the halls and meet us throughout. So next slide, please. About Fidelity. So when I joined Fidelity 10 years ago, I knew a lot about Fidelity, and it was growing. It was a really great company, but they really are market leadership, and they retirement and income planning is core of the business. So we're here, and our tools and resources start with that. So we have investment allocation tools, retirement analysis tools that will help you, and you'll have access to these as well as a participant. It's a privately held company that's been around since 1946. So it helps us be a lot more nimble in the marketplace. And Sam and myself, we work on CSU as well as other plans inside of Colorado. And we've really, CSU as well as, not paying into Social Security is a lot different than, plans outside. And we understand that. And so when we put together our tools and retirement income planning, we really, I would say, understand those plans, those 403Bs, 401As, non-participating Social Security. My wife is actually a school teacher, so I know it probably better than, probably a little bit too much. Her friends all contact me now with when they're paying into Colorado Para and how that impacts Social Security and things of that nature. Next slide. So there's our two good-looking guys there, Sam and Stephen, and we are not the only two that are going to be working with you. Lynette was up there yesterday at CSU. We have Liz, TJ. We have a huge team. We are going to be the primary points of contact. And so what that means is that if our internal team has questions, or if we meet with you all and you have questions, we can funnel these up to human resources, and they can put them on those frequently asked questions. We'll be doing a lot of the one-on-ones on campus. We will be doing a lot of the visits, including department meetings. We're doing some of those starting in mid-April. We'll be doing help desk, typically in high traffic areas where you could just stop by and ask a quick question. Or if you have a question on a form, let's say you are transferring funds over from one of the two other vendors, we'll be there. Or if you need help logging into your accounts, as well as Ask Fidelity sessions. Sessions like this, maybe they're 20 minutes where we can just answer quick questions, show you how to log in, and we'll be doing one-on-ones virtually as well as in person. Next slide, please. And then before if you see these on the webinar chat on the right, I would encourage you to save some of these as links going forward. They're awesome resources. CSU Human Resources has put together great FAQs as well as links to the transition guide, the investment options as well as the information guide. So the transition itself to Fidelity, this has been a question that so many people have asked me is, number one, when is this happening? This is in June. So we will be sending out additional information, but this is happening in June. And if you're already a Fidelity customer, there's nothing you need to do. Your username and password will stay the same, whether you're a Fidelity customer with just like a Roth IRA or a personal account or with a CSU account. Username, password will stay the same, and there's nothing that you need to do essentially, but it's still important to check in and make sure that your accounts and investments and beneficiaries all look good. If you're a Corebridge participant or a TIAA and new to Fidelity, in June, you will be able to log into Fidelity's net benefit site. This is our website that you'll be able to access your account and view your investments, look at your investment elections, update your beneficiaries. Now, remember, there's always two things with this, and you can go to the next slide, please. One is premiums or contributions that come in. So that's your paycheck. Every month you get paid, and those are your contributions. So those will be coming in at the end of June, and you'll want to get in there. If you want something different, you'll want to log into your net benefits. And then there's the transfer of the existing monies, whether Wendy did a great job explaining the mapping. If those transfers will come over, those will be happening in June as well. We'll have specific dates for those in the enrollment or in the transition guide that will be sent out. I believe that's going to be around April 22nd or so. But when you log into our accounts, you're going to have access to our tools, our workshops, our videos, whether they're Sam and I doing them on site or our ones that are done nationally. You'll be able to schedule appointments with us. And the enhancements, I think, are so great. Our tools and technologies are great, but also just enrolling like in the 403B, instead of completing paperwork or a salary reduction agreement, you'll be able to do a lot of these things right on our website and change your contributions at any time. Next slide. So these are the three things that I would strongly encourage you to save. One will be the email that we'll be sending out right around April 22nd. This is called the transition guide. I think people were asking about the mapping dates, blackout dates. That will have the specifics of all the dates that will be important for June and when you'll be able to go in and do things. So that email will come out, and I would encourage you to save that. Second is the transition website. That's my Fidelity site. That one has two important documents on it. One is the investment guide. So if you haven't looked that up, and then the other one is the information guide. That guide on page 20 and beyond has the mapping for your monies, your existing monies, like your balances at TIA and Corebridge, as well on the right-hand side, it's your future contributions. So make sure that you just take a look at that and save that. Sam, anything that I've missed that you would like to add in there?
I think you hit on everything pretty thoroughly. I just wanted to remind everybody that we do have a local office down there in the corner of Horace Jefferson College that we opened up a little over a year ago. Some good folks over there. I know that the team, so does Steve, extremely well over there. We work with them constantly, and we're on conference calls with them constantly as well, just to ensure that they're up to speed for anybody who walks in or calls in. because we've had a lot of folks drive by to get Torchy's Tacos next door, and they just happen to walk into the Fidelity office asking questions. We want to make sure our good folks over there are up to speed on all the updates as well.
Yeah, thanks. It's already grown. We were in there the other day. They opened about a year ago with eight individuals, and they're already up to 32. So, all right. Well, thank you. I think that is all we had for wanted to cover. And again, we are here to help. Sam and myself, people were asking for our email address yesterday during the session. It's mine is steven.maloney@fmr.com. And Brittany, you may want to post that in there. And then Samuel, if you want to share yours as well.
It's a Samuel, Samuel .Casad, which is CASAD. My name's spelled right below my picture over here at fmr.com. And then Brittany will most likely share it in the chat room.
Great. And that answers one of the quick key questions. There is a specific question from an individual, and I think it'd be best, to get with Stephen or Sam, and they've got their contact. Even if you're out of state, you can email them. You've got their phone number, and they'll set up a one-on-one to talk to you and walk through exactly your specific situation. So I think that's the best bet. And if you have any questions remaining from that, so they're putting their contact in the chat. So go ahead and get that down. And you can always contact us in HR too through either walking into the center. You can email us. You can call us. That's another option as well. Let's see. There's a statement and a question. So currently, and for the past 3 years, I've not been assessed a fee through TIAA. Is this a new fee? Unfortunately, you have been assessed a fee from TIAA. They do a very good job of I'm a TIAA client at the moment, and it took me quite a while to try to find that fee on the website. You are being charged a record-keeping fee. You are being charged an investment fee. So there is no new fee. In fact, as was presented here, the fees are going down. The record-keeping fees will be less, and the investment fees are less. It's quite a challenge because you, in TIAA and many sites, you see just your net investment portfolio. You don't get to see your gross investment portfolio with the fees netted out unless you dig in. And you can ask your current investment advisor specifically for that. And they do need to provide that to you, and you can get that if you'd like. For clients out of state, are they serviced by you as the Fidelity reps or Fidelity reps in their state related to this plan?
Technically either or. Me and Steve are both licensed on a national level, all 50 states. But our phone reps, and we've got hundreds of them that are very qualified and licensed as well, they're also licensed in all 50 states too. And then, by the way, technically, Brett, we've got offices over 200 brick and mortar offices like the one in Fort Collins across the country. Any CSU employee, whether they're retired, separated, or whatnot, or even on vacation, can literally walk into any Fidelity office. We share all the same information. So if you talk to Steve one day and talk to Tom the next, and me a week later, we can see the notes and previous interactions. That way we're not kind of starting all over again. And we're all a team at Fidelity, so I remind you guys of that. So a lot of folks like to have the same point of contact with giving financial advisor guidance. But technically speaking, there are a handful out there that prefer to get a different diversity of opinions and guidance and suggestions. And so sometimes it's totally appropriate. In many cases, it's totally appropriate across the board. If you want to talk to Steve this quarter, and me next quarter, and vice versa, or even the local office.
Yeah. So it sounds like lots of flexibility. You can talk to anyway. But Stephen and Sam will actually be experts in our CSU specifics. So you're welcome to contact them. They will probably have the deepest knowledge specifically about CSU. But anybody you want to work with, you're able to work with Fidelity. At the moment, we don't have any questions. Oh, we just got one. Actually, it's a specific one that Joseph can answer. But if anybody has any other questions, I don't see anything out there that we have in the open queue. If anybody has some, we still got some time.
I'll just, I know a lot of times common questions are fees. Are there fees in the actual transfer itself? So remember, there's two different, it's a non-taxable event, and there's any of the mapping will be no fee. Anything that isn't under the mapping, you will need to contact your, Corebridge or TIAA, what the process is, and if there's fees on that end. So that would be, wanting to, and then that goes into the second part, like what's the process? It is actually a form that needs to be done, and you'd want to contact, and work with Sam and myself as well as your other carrier if it is something that you want to transfer those over. So that's a common question that we get.
Another one, I think it's a great question we've gotten others is, if I have two existing retirement accounts, and in this example, two TIAA accounts, one CSU and one's from another employer, should I look into having it transferred to Fidelity? And the answer there is it's completely up to you. You can leave that there. We will not be, if it's outside of the CSU plan, this automated transfer and all the things we're talking about will have no impact on it whatsoever. That's completely independent of this. So that account from the other employer is yours to do whatever you would want to do with it. If you'd like to transfer it in, you can talk to Samuel and Stephen or a Fidelity agent, and they would be happy to work with you on that. But if you want to leave it as is, you're absolutely able to leave it there, and it won't have any impact with what we're doing here. Okay. Let's see. I'm a TIAA participant and a former faculty member. Considered moving all my funds within my I am considering moving all my CSU funds within my TIAA account. Will it cost me to move out of the CSU account? It's like, Wendy, you want to answer that one?
Yes, no, it will not. There will be no charge to leave the account. Everything you will be invested in will be mutual fund type investments that will be liquid and transferable very easily.
Maybe someone knows what page we're talking. It says, what does footnote 2 mean on fund transfers? I don't know if that was on, if that's referring to a slide or if it's referring to one of the documents. So whoever, if James, if you maybe could just provide a little more on where you're seeing that, we'll try to make sure we get you the right answer on that one.
I can jump in, Brett. I think
Okay,
that's in the mapping appendix for Corebridge. The fixed account plus annuity has a footnote that says restrictions may apply for this asset transfer from this annuity option. So that might be a question, I think, maybe for you, Wendy.
Yes, so whenever you're talking about annuities, it's really it's insurance company specific, it's contract specific with the participant, and it's investment specific. So I think your best option with any questions about the transferring of annuities is to talk to your advisor at that company, so at Corebridge, about the transferability. You can also, the Fidelity folks I think can help as well, but I would start with the current place where you have an annuity to talk to them about those rules about that transfer.
All right, well, we're a few minutes early, but I'd like to thank you all for joining on a Friday. And if you have any remaining questions, right, one more. Right, we'll do one more since we got a minute. How will required minimum distributions be handled? Can this be automated?
So on Fidelity, absolutely. So we'll definitely follow up with us. We'll know more on the mapping and the transition guide, whether if you're set up for automated already with the other company, that should transfer over and continue with us. Otherwise, if it doesn't, we can set it up so it is automated on the Fidelity side. Not an issue at all.
All right, well, thank you again. And if you do have remaining questions, please do reach out to Fidelity or us in HR. We will do our best to address every question you've got in a one-on-one scenario, or after you've looked at this documentation. There's a lot of it out there. We understand that you're going to be getting hit with a lot more. When you have questions, get in touch with us. We know there's a lot going on. And also feedback. We always get out of these sessions just from the tone of the questions. We get some good feedback. So please provide us as much feedback as you can so that we can continue to optimize this and make it as good as possible for all of us. So again, thanks a bunch. Have a great remainder of your Friday and a great weekend.
Thanks, everyone.
Thank you.